There's a couple ticking time bombs in the crypto space that I need to expose to you. One of them is going to shock you because it is so common, and I guarantee that most of you out there are participating in a program that could go belly up here soon. Banging and wanging early this Monday with a heat map that just looks nasty. I told you this week was going to be red. When it started, I was saying it all weekend. XRP heavy retreat, everyone. Down 7% last 24 hours, 37.8. Doge as well, down almost 10% now to 9.4. BNB also feeling heat, down 6.3%. But what are the big problems that we have to look out for crypto? And I guarantee most of you are participating. USDC and USDT are plunging. Here are the reasons why. People now are not only getting their money out of crypto, right? Going crypto to stablecoins, but they're then off-ramping those stablecoins for cash, and you could see the outflows. Now, hold up. Let's tell a couple quick stories here. This is going to give you the information you need to decipher if you are in high risk. All right. So we got the market cap of USDC, and you can see this last time, all right, when we had the fallout of FTX, they actually had an increase of market cap of about $2 billion, all right? But you could definitely see since they're high, definitely retreating, right? So you have more people taking money off of USDC. Now, USDC is considered the more conservative of the big ones out there, right? There's a lot less risk in USDC. They've proved their reserves for a while. You guys get the story. You've been watching the channel for a while. Now we get on to Tether, okay? And this is the same time frame as USDC. 3 stories here. Luna crash, ka-chow. Celsius crash, ka-chow. FTX crash, ka-chow. Okay, so what you're seeing here is as every time one of these big hitters gets taken down, tons of money is being pulled out of the crypto sphere with USDT. Now, if you zoom out even further, and let's do this, let's go to all, you can see that, yes, there was a huge run up here when cash was being printed across the globe. Let's not ignore the facts, everyone. But now you can see as risk is improving, well, actually increasing, more people are taking money out of USDT, out of crypto altogether. Think about it. The first big wave of sellers out there sold their individual tokens for stablecoins, right? They got other tokens, they went to stablecoins. Then they kept it in stablecoins thinking, hey, maybe we could buy the dip. Maybe I could add to our positions. What these charts here, specifically USDT, is telling you that more people are completely getting out of crypto. The high market cap of USDT was $83 billion. Right now, everyone, we are sitting right at 65 billion. That's a massive, massive retreat. Remember, that's people getting completely out of crypto institutional money. Now, hold up. If you want even further insight on, bubbles, bursts in your risk, well, I've got really cool stats for you because, as always, any article you see in this video will be linked in the description below. Look at this chart, chart number 9. What goes up must come down. This chart here covers all the booms, then subsequent busts that happen when these bubbles burst, all right? So you can see how big the Bitcoin bubble was, raising almost 1,600% in that time frame. And look at the more recent ones. China's bubble was around 400, 500%. Gold was a 400% bubble. So seeing Bitcoin 4 times higher than every other bubble out there as of rate, even US housing in 04 before it crashed in 08, right? Not even close to that with only 200%. So you can see the crypto bubble was huge. And based on what we saw when it comes to Tether, when you start looking at the time frame, you could see that the majority of it was by printed fiat from centralized governments around the world that found its way into the crypto thing. So we already said stablecoins, huge risk in USDT, where you could see USDC, people are finding more favor after every one of these bad events happened, right? Look, this was the Luna UST situation. After Luna UST, look, more people found their way into USDC. So again, it's by risk. And now let's look into risk one step further. Nexo high yield bearing crypto products come into question as market deflates. All right, do me a favor here. Replace the word Nexo with anyone else out there that offers high yield, okay? I want you to think of anything 7% or higher. If you are participating in something 7% or higher, you need to pay attention to what I'm about to show you. Nexo has come under the microscope for its high yield bearing crypto products. All right, analysts argue that Nexo's double-digit yields can't be sustainable. And remember, like I said, don't just use Nexo. Think of all the other players out there that are offering insane yield. So let's check it out. real quick with Nexo. Hey, if you want to earn 15% interest, you got to do this, 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 and this. Okay, basically hold their own coins. Wait a minute. Wasn't the FTX coin a total piece of crap? And that was an internalized coin so that they could make profit? Yep, they want you to keep buying Nexo tokens so that they can give you more interest. All right, now hold on. Hear me out, everyone. Let's go even further with this. See, they even advertise 15% on crypto, earning 15% on crypto. Now, hold up. Now, let's see. How crazy is this? Let's look at, I have right now the high yield savings account with APYs of 3% or more, okay? I went for the biggest ones that I could find. 3.8%, 3.5, 3.5, 3.25, 3. Wait a minute, Nexo is offering 15%. How is that possible? Okay, let's go to Citi. Citi's a massive bank out there. High yield savings, 3.25%. Earned 20 times the national average with Citi Accelerate Savings. So you can see that what Nexo is offering is completely unsustainable. Now, hold on. They're offering yields 5 times higher national average. Now, wait a minute. For them to offer yields that high, what does that mean? That means they have to use your money, your capital, to risk, to wager and make more than that 5 times, because otherwise they would be losing money, right? Are you guys still with me? So the problem is, right, if they turn down the 15%, let's pretend they turn that 15% down to 10, what would happen? Nexo would be less risky, but then less people would get into it, right? Now, let's say Nexo wanted to be like the rest of the market out there in terms of traditional banks and so forth. They would only be able to offer 3%. Who would put money in? No one would put money in there at all. So risky people, right? People that have total risk on their mind are putting their money in high interest yield places, which are completely unsustainable. Now, here's the issue. Celsius died at 20% offering high yields. Luna UST, we know what happened there. There's been plenty of exchanges out there that offered insane yields that just couldn't sustain it. So now let's role play a little bit more. How do you keep this whole Nexo and high yield? And think of it, it's not just Nexo, it's anyone else that's offering, honestly, more than like seriously 7%, you gotta start freaking out, all right? How are they doing it? They need more money to come in, right? They need more money to come in to pay the people that are earning the 15%. How do they do that? They have to encourage you to come in. How do they encourage you to come in? By giving you high yields. This is totally a blow-up scheme here, that as these yields become more and more unsustainable, because think about it, crypto markets just going down, everyone. I'm not sharing FUD. I'm just telling you the facts as it is. As that market goes on down, that means the crypto that they hold is worth less. We've seen, too, everything from Coinbase to other major exchanges out there saying, hey, trades are going way down. I just showed you that capital is being pulled out of the market. The number of people downloading wallets is down. Venture capital is down billions and billions of dollars compared to what funding was just even a few months ago. All right. So all of this is going down, yet they're offering 15%. And we know what would happen if they wanted to run a realistic business model and offer 3, even 5%. Who would put into it for 5% with the risk in crypto? You wouldn't. You'd be like, dude, way safer for me to put it in cash. FDIC insured at the bank. All right. Read between the lines. This high yield stuff cannot last. It is essentially a Ponzi scheme, where what they're trying to do is get new investments in to pay for stuff that they've already done on the books a while ago. That's how this works. The only way they can sustain it is by offering more and more juice. You remember all those times Do Kwon and all those losers out there were like, deploy more capital, let's increase rates to get more people in. When the whole Luna UST crash happened, they went from like 20% offering 40% for bailout money if they could get it. Think about that. So then the people that were like, well, I'm going to get 40%, they all got washed. They all got washed, all right? And that was the new money being put in that was used to pay old debts. Boom, Ponzi scheme. Unsustainable yields. Tell me out there how a bank, right? Most banks, when you look at them, 3.5%. How are these crypto companies doing? And don't give me the whole, oh, they're good at cost control. And all. No, most of these people are morons with no business experience whatsoever, so they have no idea on cost control. These banks have been around for 100 years. They understand the cycles. They know what their margins are on products. They know how to be sustainable. These banks know what they're doing. That's why you see the average right there around that 3 to 3.5%. So when you see crypto companies out there offering crazy amounts, 7% or more, come on, double the national average, Come on, it's just a house of cards waiting to fall. Thank you very much for watching this educational video of Crypto with Klaus. Check out this cool Crypto Web3 video right here where you're going to learn even more. Again, thank you for watching. As news breaks, I'll be sure to share it with you. Have a great rest of your day.